Hey, what's going on, everybody? Today we're talking Opendoor Technologies, ticker symbol OPEN. As a disclaimer, this is not investment advice. This is just a research video that I put together meant to be educational as well as entertaining. I'm going to put us into a few different news clippings and articles surrounding the company. We're going to hear from Eric Wu, the CEO of Opendoor Technologies, and then we're going to take a look at the stock. Thank you for your time. Please continue to like, share, and subscribe. Enjoy.
Yeah, Andrew, I appreciate you having me and excited to announce that we're partnering with Chamath and Social Capital to take the company public. We always believed that one of our long-term goals was to be a successful, independent public company. And originally, a SPAC wasn't the route we wanted to take, but a couple things that really drew us to this path. One was speed to market, right? We wanted to focus the management team on building the best product and the best business as opposed to distracting the company on taking the company public. And the second is Chamath is fundamentally a technology investor. He's an operator. He believes in building organizations the right way for the long haul, and that really aligned with our vision of how to build Opendoor.
You're talking about COVID and this pandemic and how that's actually changed the environment for your company. I'm curious what you think happens after a vaccine. Does that change the future to you at all when it comes to this issue?
Well, I think it's important to acknowledge what's happening today, which is, one, consumers are choosing digital experiences first, right? And so that's happening at accelerating rates. And then two, as Chamath mentioned, Americans are on the move, right? People are moving to less dense areas. There's de-urbanization happening for the first time in 100 years. And that's creating extremely strong tailwinds for the housing market, and in particular, the markets that we operate in. I think post-COVID, I think the behavior is here to stay. I think people want digital-first experiences. And really what we're trying to do is make the buying and selling of a home simple, instant, and online.
It's always nice to hear from the CEO of companies that I'm researching. It helps me wrap my head around the vision for the company. So I'm going to put us into this article from the Wall Street Journal. Opendoor needs to show its work. And I'm going to leave everything in the show notes, of course. But the article, I'm not going to go through the entire thing. I'm just going to drop a few different highlights on it. And the article is trying to understand how is Opendoor compared to its competitor Zillow showing profitability. And when it's trying to elaborate that Zillow is not, it's meaning that the company itself, Zillow, is taking a hit compared to Opendoor, since the article will showcase that Zillow loses roughly around $7,500 on average for each home that it buys, and then subsequently sells after interest expense. And a lot of it is the interest accumulated for these companies, and it's showing right here, this chart. Opendoor is in the darker shade of blue compared to Zillow, the lighter shade. And Opendoor is in the positive, and Zillow is in the negative. And again, it's just showing that, or at least it's trying to understand, why is it? Is it because Opendoor, even though Opendoor is just now trading publicly, it's been around. Opendoor's been around for a while. So perhaps because it got a head start in this space, that it's showing that it is perhaps a path to more profitability. And I think that the profit after interest expense, and these are estimates according to the company. So you can't fake it. Once the earnings reports come out, then you can really see how the company is performing. And year to date, I think that it's safe to say that both of these companies, Zillow and Opendoor, along with like Redfin and other companies that allow people to buy and sell homes online at the click of a button. I think that with everything that's happened in 2020, and even still, it's still hard for people to do and return to what normalcy once was. I think that as an investor, it helps to pay attention to both of these companies and how they operate. So again, feel free to check out the article. It's really trying to understand, why is it that Opendoor is having such a nicer streamline to profitability compared to Zillow? Is it because the homes that are placed on Opendoor for buying and selling are just moving a little bit faster. So again, the article's asking for Opendoor to show its work. That's the title of the article, and show their work. So let's move along. Okay, let's jump into this article from the Motley Fool, why I'm not buying shares of Opendoor Technologies yet. There's plenty of optimism surrounding Opendoor Technologies since going public at the tail end of 2020 by completing its merger with SPAC from former Facebook exec Chamath Palihapitiya. Opendoor is valued at a market cap of over $14 billion. That's nearly double the value of fellow real estate technologist Redfin and nearly half the value of real estate tech leader Zillow Group. And this is still a small company that could have lots of upside remaining in the decade ahead. Opendoor is helping to pioneer a new category in residential real estate, with millions of homes sold every year up for grabs. But I don't think Opendoor is the best buy in this emerging market at this juncture. And I'm going to skip ahead a little bit of this article. I'm going to leave it in the show notes, so please help yourself. Not the best buy in real estate tech right now, given the huge potential to disrupt the currently complex and expensive process of selling or buying a home. Opendoor is indeed an intriguing company, but I'm not buying the stock, at least not right now. The reason that while Opendoor is the leader in simple-to-use cash offer real estate services in the cities it currently operates in, it isn't alone in pioneering real estate transactions like this. Both Zillow and Redfin do the same things and are also rapidly expanding. In fact, while the last year has had plenty of challenges, Zillow and Redfin actually grew, while Opendoor shrank. So they're comparing the revenues for the first 9 months of 2020 between all three, and look at 2.3 billion, 2.5 billion, over half a billion for Redfin, and they're very similar, right? We've kind of established that these three are the players. More importantly, Opendoor and Zillow seem to be the more preferred two. However, the article suggests that, and continues, that Zillow and Redfin are also profitable. And in my previous article, taken from the Wall Street Journal, showing that the company itself is taking a little bit, Zillow is taking a little bit of a loss in its acquisition and the mechanics of how they purchase their homes, while Opendoor seems to be profitable. And they're trying to understand why or how that is to be. The incumbents earn revenue via agent fees and other mortgage services. Perhaps that's why. In addition to their growing presence in the cash offer direct buy space compared to Opendoor, which is almost completely reliant on the new model and has yet to reach a profitable scale. Selling a home from its inventory counts as revenue, but gross profit, the difference between the sell price and what was paid for the home, is actually a better metric for Opendoor given its business model, rather than the service fee used for Zillow and Redfin. Opendoor's adjusted gross profit was $173 million through the first 9 months of 2020. That compares to $152 million in gross profit for the smaller tech-enhanced real estate agent services at Redfin. Let me skip ahead a little bit. All of this is to say I'm passing on Opendoor at the moment. Redfin looks like the best value among these real estate tech names, and I think it will outperform its peers. Nevertheless, the long-term potential is there for all three of these companies as they simplify the way homes are bought and sold. Opendoor and its financial technology platform thus deserves to at least be on your watch list. Okay, we are here on Seeking Alpha on the Opendoor Technologies page. I just want to showcase a few different key data metrics, and we'll jump into the stock in just a moment, but I just wanted to showcase a little bit on their revenue. And we see here that the December number for the revenue was close to $5 billion. The estimate for 2020 is looking at around half that. And that's a little bit, that's understandable, right? With everything that went on in 2020, that the revenue for certain companies where it's heavily dependent on real estate, of people buying and selling their homes, moving, it was very restricted in 2020. So I think we can see a decent rebound as the revenue estimate for 2021 is calculating $3.5 billion. I wouldn't be surprised if it beat that estimate. The earnings per share The actual for Q3 2020 was about, it was a negative 0.5, and then we're looking for Q4 2020. The estimate is a negative 0.19, and then we're seeing here that it's going to continue. The estimate, EPS estimate, is looking to still be negative, depending on your risk tolerance. For me, my risk tolerance, this isn't nothing to be scared about. This is actually right in line with my risk tolerance. I see that it doesn't, it's a very young company. The market cap roughly around close to 20 billion. So getting from a mid cap company to a large cap company, getting into a mega cap company is essentially what a company is trying to do. They're trying to gain market share and become the most profitable company. In my opinion, that's what every company ought to be doing. And we're looking at a little bit of their ownership and how institutions own roughly close to 20%. The individuals and insiders own less than 10%. I would like to see that number grow. That's just, for me, something that shows promise of a company. And then the public and other ownership is almost close to half of the percentage of ownership. So again, I'd like to see this number right here for the individuals and insiders grow. Some of their peers, we do know that Zillow is probably their most indirect, biggest competition. So it's not listed here on Seeking Alpha, but we've already kind of established that. And I think that it's safe to say that it will continue to grow. Opendoor Technologies, in my opinion, is a pretty disruptive company, along with Zillow and along with Redfin. But let's jump into the stock. Let's take a look at it. Okay, so before we jump into my trading view, I just want to do a side-by-side comparison of Opendoor and Zillow Group. And we see here that they do move very similar. Of course, the price of Opendoor compared to Zillow, right? Zillow's over 200. It's a $200 share company versus Opendoor. And we see here, let's take a look at the 6-month window. And that's, for me, obviously, since Open has just been traded recently, and we took a year to date, that yes, Zillow, in my opinion, its performance, right? It's up 45% compared to 35% year to date. The 6-month window and the 3-month window showing that they're very, very similar. So it really does come down to preference, in my opinion. Since we see that Zillow Group is at $200 a share, it leads me to think that Opendoor can easily get there. But again, that's just that is just a speculation. Of course, we'd have to see some more earnings, and we'd have to see how Opendoor can really perform in a post-COVID economy. Okay, we're here in my trading view, the 1-month trading window of Opendoor Technologies. I'm going to make a few different technical outlines for us to pay attention to, and what I'll be paying attention to coming off of these levels of support in the mid-20s. It's had a nice run. It's had some decent moves since February, and I'm just noticing, these stair-stepping patterns of ascension, and it's just climbing. And I think that every time that it pops, it does come back and test some levels of support. However, February, it's really just been taken off, and my thinking is that the vaccine play and the return to normalcy tends to help out real estate, and I'm seeing this company as a real estate company as well as a technology company, of course. So let's play out a few different scenarios. That this most recent level of resistance in the high 30s, let's just call it $38, around there, that if Opendoor can test that level of resistance, then I think it could become a level of support in the future and to the moon. However, I'm thinking, and the way I'm playing is perhaps I wait for a pullback, because historically, anytime it has a decent run, it does come back to a level of support. So I'm thinking, around the $30 level would be a solid pullback. It'd be a nice gift, and I see it as a great buying opportunity. However, I wouldn't be surprised if another scenario took hold and we just see that the company pops immediately, right? It can do anything. We don't know what it's going to do. But let's just say it tests that level of resistance and it starts to trade above it and makes that level of resistance a new level of support, creating a higher low. Then I think it's off to the races, perhaps. And for me, myself, I'll be looking to add this company to a portfolio. But I do see that perhaps it can consolidate and testing that level of resistance in the future. And then we're going to be paying attention to that earnings date, March 4th. And depending on what we hear there, it could significantly move the stock one way or another. Okay, I'm going to leave it here. I want to thank you for your time. I really do appreciate it. Please continue to like, share, and subscribe. Hit that notification bell. It helps people find my channel and my content. If there's another company, ETF, or an IPO that you'd like to see me research, please drop it in the comment section below. This video was requested by Alfredo. Thank you, Alfredo, for your suggestion. I really enjoyed making this video. Tomorrow the market's closed. Everyone please be safe. And until next video, y'all take care.